You're listening to The Preferred Way, a retirement podcast brought to you by Preferred Trust Company, the preferred custodian for all alternative investments.
Hi, everyone. Welcome back to The Preferred Way. Today, we have Mason with us from Connect Invest. Hi, Mason.
Hello, everyone. I'm excited to be here.
Thanks for joining us.
Great information for you guys.
Okay, so tell us a little bit about Connect Invest first.
Yeah, absolutely.
And what you do there.
Okay, so I've been with Connect Invest for about 5 years. I am the director of operations. So I've been there for a lot of the development and the website, backend system, and actually helping setting up these particular funds that we offer. So at Connect Invest, what we do is we're just an online investment platform. But what we allow investors to do is invest into funds that are essentially investing into real estate. So the whole idea is that they're allowed to get into a real estate investment that's not your traditional rental, that's not your traditional mortgage-backed security. You're basically allowed to, it's more of a hands-off approach, I guess, if you would, that you're allowed to invest into with a defined exit date and corresponding interest rate that you get on a monthly basis. So it's a nice way to kind of get into the investment world that's in the real estate side of things, but not really have to be hands-on as you would with other particular investments and still get a really good solid return backed by a great asset class.
So with that being said, what would you say is the difference in investing in this type of fund rather than directly into real estate?
So a little bit of some differences there. And so one of the things is, do you guys have a lot of clients that invest in just rental properties? Like you can use your qualified funds for that?
Yeah.
So one of the things with rentals, I have a few, and they are, depending on your tenant and where the actual property is, could be an actual relatively headache compared to what
it takes a lot of work
you might
to
be
manage
told
a rental property.
You're going to get this on cash return, and this is going to be your appreciation on the asset. But one of the things that you don't think about is, I've had, and this could probably be on my end, is I've had some bad tenants. I've had to evict tenants. So all of a sudden you have months of not accumulating rent, or you might have an AC unit go out. And even with the bad tenants, all of a sudden you go on, the property's destroyed. Floors are destroyed. There's crayons on the wall, and probably that if you have property managers and things like that, they could obviously probably eliminate a lot of those issues that you run into. But for example, let's say your toilet's leaking in the middle of the night, you got to get up to go fix it. It's that typical rental property, headache that comes with it. So with that being said, it's a great investment. You get great tenants, great area, have great income. And depending on how you're financing that, it can be a great way to accumulate solid returns in that space. But as we talked about it's very hands-on. And where with this, a lot of people don't understand that you can invest into real estate through an alternative. They don't have to worry about selecting an individual property, buying a handful of rentals, and getting proper diversification. So the way we structured the funds that we offer is you're able to use your funds. You can even use qualified funds and to invest into just a fixed duration, fixed income. No, you don't have to worry about selecting an individual loan to invest into an individual property. And you're getting diversification across a pool of assets and getting a fixed return on a monthly basis, as well as know when you're going to get paid off. So it's depending on how hands-on you want to be. I know there's a lot of people that they want to get into that asset class. They honestly didn't know that it was available before, but they just don't want to deal with the hassle and like you said, the broken leaking toilet in the middle of the night, or John Smith not paying rent by the 5th and going down there knocking on the door to see what's going on. And it's just a great way to get in without being basically hands-on.
So you mentioned that you could use qualified funds for this type of investment. Explain that a little bit.
So if you have retirement funds that are self-directed, you're allowed to invest into it. It's an alternative. So you're allowed to use those funds. At Connect Invest, we don't charge any fees to our clients. And we've been told by the hundreds of investors that we have coming on that they like to use the qualified funds because it's not a hassle.
They don't have to worry about it.
They don't have to worry about it. You don't have to worry about it. And you get a return that's paid back to your IRA on a monthly basis. We don't charge any fees for you to open the account. We don't charge any fees based on the performance. We're kind of with you along for the ride because that's how we generate revenue as a company, is investing into solid loans to get that, or to derive that interest to then pay our investors. So, a lot of investors that don't want to deal with that, you are able to use those self-directed funds, open up a Connect Invest account, and then through your custodian, use that direction of investment form to facilitate, if you want to invest into a 6, 12, or 24. And that's what we offer at Connect Invest. We have 3 different different types of notes. There's a 6-month note that's 7.5% annualized. There's a 12-month that's 8% annualized. And then there's a 2-year that is 9% annualized with the interest paid every month and knowing exactly when that principal is going to be paid out, depending on if you need to use the funds for a different type of investment.
Yeah. So why would you say it's nice to have that defined exit date, that definite payoff date?
Yeah, and that it comes depending on what the clients are trying to do with their funds. There's a handful of clients that we have that they want to get a greater return than what they're seeing maybe in the stock market or what they're seeing in a high yield savings account, a bond CD. And so they want to get a greater return, but they may need the funds, let's say in 7 to 8 months because they want to go buy a rental or they want to use the funds to go buy silver, gold, something of other sorts. Then they're allowed to know exactly when they're going to get paid off. Because there are other investments out there where they'll tell you, hey, this is the anticipated payoff date. But is that ever true?
Yeah, no.
No. I mean, there's some variance there, right?
Yeah.
You might be plus or two.
Sometimes it's true.
Yeah, sometimes it's true. But to an exact T, knowing exactly when you're going to get paid off, it'll allow you to help further strategize with what you're looking to do with the monies and know exactly when you're going to get the principal paid off because it's not a variable rate. It's actual defined date of when that principal is going to hit back in your account.
And how easy is it for clients to reinvest once that payoff has happened?
Very simple. Very simple. All they'll have to do is do another direction of investment form with the custodian that facilitates the amount they want to invest in and the selected note in the term with it. From there, we'll work and get that paperwork completed and submitted to the custodian. So
it's a pretty quick turnaround.
Oh yeah, yeah. It is. It's fast, and then, like I said, we don't charge any fees so it's on depending on what your fee is with the custodian. And I know we have a really great fee schedule set up with Preferred Trust that allows investors to invest with not a heavy upfront fee.
Yeah, and usually on the Preferred Trust side with the Connect Invest investments, because we have all of the compliance documents already on file, it's a very quick process on our end too.
Oh yeah.
Sometimes next day.
Yeah, it's as easy as basically telling you guys, hey, here's my account, it's open. I want to move $50,000 from my traditional IRA into a 2-year note. And then we work together and make sure that document's completed and submitted. And then once we get the funds, you start accruing interest the next day. And then the interest is paid back on a monthly basis.
Nice. So how does Connect Invest choose the borrowers that you're deciding to go into or the loans that you're deciding to go into?
Yep. So we work closely with Ignite Funding, who's a loan originator and servicer, and they underwrite and service, many, many loans every single month. So for us, as we always tell investors, you want to stay diversified. We also want to stay diversified because what we do is we use the proceeds from the note sales and we invest those into loans. So we don't want to put it all into loans just in Nevada. We don't want to put it all into residential loans, multifamily. So we diversify those funds just as any other investor would. And so we make sure, we are diversified across several different borrowers. We look at loan to cost. We look at exit strategies. We look at all those things to kind of come up with, where are we going to facilitate these funds towards. And so right now we have about 200 different loans between the two funds that are active and in good standing. And I believe it's 14 to 15 states, and it's probably north of 50 different borrowers that we have invested into these loans with. So like I said, we drill down as much as possible from project type to, acquisition, development, construction, different phases, as well as different geographical locations to make sure that, we're not too saturated just here in the Nevada market.
So each note is also diversified within different projects, different borrowers.
Yeah. So one of the beauties of the notes, which I think is a beauty, is that you're not invested into just one particular loan. Traditionally, you may have just used the funds to invest into this one loan here in Nevada. And there are pros and cons to it, depending on how much funds you have to facilitate to these notes, right? And if you don't have, a handful of funds to make sure that you have, let's say, 5 to 10 different loans, you're kind of your performance and what you're going to get in return is actually based on how that loan's performing, borrowers making payments. And so with this, when you invest and purchase the notes that we offer, you're not tied to that residential loan here in Las Vegas. You're actually basically diversified across the entire asset pool that we have. So I kind of explain to people, it's like you're investing into a mutual fund in the aspect of that,
there's multiple investments inside.
Yeah, there's a handful of assets that are behind it that are driving the interest that we're able to facilitate and pay you that interest rate that is on that note.
Can investors pick their own notes? They get to pick which term, which percentage?
Yeah.
Do they get to pick the loans that are inside those?
No.
notes?
So
Okay.
that's what we do at the company. That's where it's a little different, right? We're the ones that are diversifying those funds. So it's really that hands-off approach. You don't have to go and sign, many documents, especially with the DOI and how we have everything set up with preferred trust. It's as easy as just selecting the term that you want with the corresponding rate. And then from there, we'll process paperwork. But you're not picking the individual loans.
Do I know what loans are inside?
We disclose kind of a high-level overview of, we have X amount in construction. We have X amount in acquisition development. Here's the states that we have the loans in. So there is high-level overview information that is sent out to investors just to give them an idea, because a lot of them, they enjoy to see kind of, where their funds are being deployed to, the types of office spaces or multifamily or all these other things that their funds are essentially helping build, construct, creating jobs, all those good things that they don't necessarily see when they're just picking a note that is happening behind scenes.
So with this type of investment, you can utilize a lower investment amount as well, correct?
That is correct. So our minimum is $500.
Okay.
I always encourage investors to look at what the fees are that their custodians are going to charge, because obviously you don't want it to eat away at your return. So I kind of, if you're only going to do a couple thousand, it might not make sense, just because depending on what that transaction fee is. And I think with preferred, it's $50 per transaction, but it's only a $200 annual fee, correct?
Yes, correct.
So it's still relatively lower than most custodians out there if you just use the funds for this particular alternative.
Yeah, so you want to make sure you're investing enough to offset those fees at minimum.
Yes, offset the fees, and then make sure that the return's still there, and that obviously if it's in that tax deferred account, it's beneficial to you guys as clients.
Yeah, definitely. How does Connect Invest or these type of investments compare to other fixed income assets?
That's a great question. And so
and you have a great answer.
I hope I do. So depending on what you're looking for, a lot of where we're competitive is that rate. You can go and buy a bond, a CD, put it in a high yield savings account. I'm not sure if you can do that with qualified funds unless it's maybe like a checkbook LLC.
Yeah, just through an IRA LLC.
And so, depending on what you're looking for on the return side of things, we're probably going to be almost 2 times greater than what you're going to see on those. I think most high yield savings are sitting in the 3s. You can maybe find one in the 4s. Granted, those funds are liquid in a sense. And then bonds and CDs are trending around 4-ish%.
Yeah.
And so depending on the note you select with us, you're going to get, 7.5 to 9%. And then the beauty of real estate too is that there's a tangible asset there.
Yeah.
And so everything we invest into, we're in first position. And so there is a tangible asset there in case that, the borrower defaults. We are on the deed of trust that when Ignite goes and takes the property back, we're still in ownership of it. So it's not the funds are just out there. We're in a second position where we have no right or say in the collectability of the asset. So it's another benefit of being in real estate, because we know it's not as volatile as the stock market, right?
So that kind of brings up a good point. What do you do if something goes into default? Because it's going to happen. I mean, there's risk to everything.
Yeah.
So what happens?
So what happens is we receive some ballots and stuff from Ignite, depending on what the situation is. Mm-hmm. So maybe the borrower is just delinquent on rent. Maybe they failed to make rent, or not rent.
Interest
payment, not rent. Mine's in the wrong space. But and then they send correspondence to us just kind of letting us know, hey, this borrower failed to make payment, or, he's trying to move forward and sell it through a quick sale, or all, there's so many different things. Each loan's kind of its own unique situation. So we receive communication on those types of things, and obviously with the best intention of how we're going to be able to collect as much funds as possible within the, fastest time frame, because time value of money, right? We don't want the money sitting there for 3 years if it's a certain percent difference, when we can probably take a short sale and lose a little bit of principal, but at least we can get the monies back and continue to work.
Reinvested,
And so because of how the fund's actually structured, 1 or 2, a handful of defaults based on how the performance or the portfolio is set up, not going to impact our investors, because we have, the other 190 that are performing, paying interest, that we don't miss a beat.
Yeah.
And so we just work through with, Ignite to make sure that everything's moving forward, that they're going through the proper, well, we don't do this, but, they're the ones that are facilitating all that stuff and providing us updates to hopefully, get that thing recovered on the principal balance to get us our funds back. And then we can continue to get those working.
Reinvested.
Yeah.
So when you say they ballot you, they give you a decision, they give you some options and you can decide, do we want to sell and potentially take a loss maybe, or do we want to hold on to it and try and get?
Yeah. It's a very detailed ballot. It kind of explains what's going on, with the property's value, why this situation arise. Maybe, there's a fluctuation in the market with, multifamily, or there's something else that happened. And then they'll provide a few options of resolution. And then with us being on first position, we have a say in, maybe we do want to go forward with the foreclosure because we know the value's there. And they kind of outline everything in regards to what's going on. Or maybe they'll advise, maybe that's not the best option. Maybe it's better to kind of let it sit there and sell in the next 6 months. So they provide very detailed explanation as to what's going on. And then from us, obviously making the best and most important, obviously protecting that principal, we'll make the corresponding decision on what we feel is best to make sure that, the money's still working and we're not going to see a significant loss depending on the situation.
Yeah. How would I go? Let's say I want to go open an account with Connect Invest. I have an IRA at Preferred Trust. How would I do that?
So you would go to connectinvest.com and you would just start the account process. And then from there, you would select the IRA option. And if you already have an account with Preferred Trust, you just input your account details. You put in your account number, what kind of a account type it is, traditional Roth, all those other items. And then from there, you're able to select the note, sign the paperwork within our website. And then once we get the completed docs, we can send it off to, or we will send it off to Preferred Trust for you guys to facilitate the distribution, the transfer. Otherwise, we do have clients that already have a cash account. And then, they have an old 401k or something sitting on the sidelines from a job they had a handful of years ago that they honestly kind of forgot.
Yeah.
So what they can do is roll it over and then open up that account with Preferred Trust and then use those funds to then invest. So everything is on our account or our website that you're able to open the account, input those information regarding your account, and then select the note you want to invest into, or you can even do it on the preferred side, I believe, as well.
Okay. So I have my account open at Preferred Trust. I go to Connect Invest website, complete my application documents there. Then what happens?
Then from there, we'll do all the work for you. And we'll just let you know, hey, we received the funds. And as soon as we receive the funds, you start earning interest the next day. There's no lag time. There's no downtime. There are some other investments where you may have to wait for that particular loan to fund or other items. But because of how we have it structured, that once we receive the funds, we notify you, hey, Alysia, we received your $50,000 from your Roth from PTC. It's now actively invested. Here's the completed loan docs, and we'll submit that to you. And then from there, it's hands off.
Then I just sit there and relax?
Yeah, you sit there, you relax, you receive email notifications that said, hey, here's your interest payment. And then, we send that back to the custodian on a monthly basis. And so if you don't want to have to deal with tenant hassle, you don't want to have to deal with doing too much due diligence and just kind of sit back, collect 7.5% to 9% and something that is collateralized by real estate, but it's through the alternative field. It's a great way just to kind of be more hands-off and just receive your payment every month and not have to worry about the day-to-day headaches of all those other items.
Yeah, you could just watch TV and get your interest all at the same time.
You sit back, you're just collecting your return and, everything's going well.
So I'm collecting my return while I'm watching reality TV and then my payoff happens. What happens then? What does Connect Invest do when my payoff happens?
So once you get your payoff, we'll send that back to the custodian, notify you. And I think you guys also will notify them, hey, you have these monies available to deploy, reinvest, whatever you want. And then from there, if you liked how everything went and want to redeploy it, then you just go through the same steps you would initially to submit the paperwork and sign everything to get the investment docs going. But
so is it easy enough to do that online?
Yes.
Like you just sign in online and say, I want to reinvest?
Sign in online. We use a document signing service where it populates document with all of your your information from your account, everything that's needed in that direction of investment form, account number, account type. It has the corresponding documents for the subscription, no purchase agreement. So everything will be pre-filled for you. And then all you have to do is essentially sign off that, hey, I want to do this with my monies. And then from there, it's as easy as that.
Peasy.
Easy peasy.
Easy peasy lemon squeezy. Okay. What haven't I asked you?
I don't know. I feel like we kind of covered a lot of what Connect Invest is, a lot of the finer details,
And who's your favorite custodian? Preferred Trust?
My favorite custodian is Preferred Trust. If you're talking on a fee schedule, they have the best fee schedule around for alternative investments that Connect Invest would be.
Yeah, and I can say from the Preferred Trust side of things, it's very easy. Like I said before, it's very easy to make an investment with Connect Invest because we still have all the documents on file. Mason will send us an email saying, John Smith wants to make an investment of $50,000 into this note. We send out those documents, and as soon as we get those back, we can send the money on over. So it's a very quick process on our end as well, which is nice.
Very quick. And like I said, one last thing here, it's perfect for a self-directed IRA.
Yeah.
If you want just a hands-off, simple return and know exactly when you're going to get paid off and not have to worry about us taking a management fee off top or having a fee to even open the account, it's a great place for people to use retirement funds to get a 7.5% to 9% return and know exactly when they're going to get their principal paid out.
And outside of using your self-directed IRA, you can also just use cash. Correct?
Yes.
I can just send you $10,000 if I wanted to, and
yeah. So
cash.
We have a handful of clients too that they do invest in just cash, and then they also open up an additional account within that login for their retirement funds. So then they have cash funds working. You can even use entity.
That was my next
question. A lot
question.
of people that have trusts, a lot of people that have LLCs. There's a lot of people depending on maybe their tax strategy or where they want to use the funds from, depending on that. But they are able to use, entity accounts. You are able to use checkbook LLCs, your retirement funds, and then just cash funds. And so, we're starting to see a lot of people get payoffs from CDs that, 4%.
They'd rather have 7.
Yeah, depending on what inflation's eating, you're kind of, what are we doing here? So we're starting to see a lot of people rotate those funds from those payoffs into something with a greater return. We're starting to see that a lot more within the last few months.
And so I know as far as the IRA side of things, if there is a payoff, we require the funds to come back to the IRA and then redeploy them. But what if I am a cash investor and I say, my $10,000 is paid off, I want to reinvest it. Do you have to send it back to me, or can I just leave it with Connect Invest and redeploy it?
So you can actually leave it. And this is all thanks to technology. But within your account, you have this thing called a wallet. We just call it your Connect Invest wallet. And so when you add money, it goes into your wallet, and then you facilitate what note. So it's a little different than the IRA, because the IRA, you have to have all the documents completed before the custodian will essentially issue the funds.
Yeah.
To qualify, they have to go through the whole 9 yards. But with a cash account, you can add the money into the wallet, and then you from there select the note you want to invest into. And so every time you get an interest payment, it goes to your wallet, doesn't go to your bank. And so if you want to redeploy it, you can, or you can withdraw. I have a handful of people that they withdraw for their monthly expenses every month. Especially the older people that are retired, they use those funds to pay for their electrical bill, utilities, groceries maybe.
Yeah.
And so, and then once the principal gets paid off too, it hits the wallet. And so even as a note's going, you can add additional funds and purchase a different note. So we have people, they call it the ladder strategy. So maybe month 1, they buy a 6-month note. Month 2, they buy a 6-month note. And they do it for 6 months. So all of a sudden, month 7 hits, you start getting principal every month that you can redeploy or withdraw if needed. And so you have that flexibility to pick and select many notes as you want. And obviously, we encourage investors to not just put all your money with us. It's so critical to make sure you're diversified across, a handful of different investments, because you don't want to get caught, And so I always tell people, I'm like, I know we have a really good product with a crazy good return depending on other investments you're looking at, but it is critical to make sure you are still diversified.
Yeah. We don't want you to send all of your money.
No, just a portion.
Yeah. So my money goes back into my wallet, and let's just say my interest is going back into my Connect Invest wallet, right? I have to wait till it gets to 500 minimum.
Yes.
Okay. So if I'm only getting, let's say, for example, $100 a month, I'll have to wait till it gets to 500 to redeploy it.
Yes.
But
correct.
I can just leave it at Connect Invest until that time comes.
Yes.
So what happens with my money that's sitting at Connect Invest?
So we're actually paying 2% interest rate on funds if they have 5,000 or more invested.
Okay.
So it's not a high yield savings account, but at least it's something.
Yeah.
And so, we just kind of put that in place because that's what we're getting for funds on deposit with the bank. And so we're like, why not pass that through to our investors as just an additional, hey, we appreciate you investing with us, but here's just an additional incentive, that for the funds that you have sitting idle until you get up to that 500 again. Or maybe you add 400 on that example to get the 500 to, reinvest into a different note. So it's just something else, we kind of threw out there just as a little incentive to some clients.
Yeah, well, you're getting at least something while your money's sitting there waiting to build to redeploy it. So something's better than nothing.
Yeah.
It always is. Well, Mason, thank you for joining us today. We've learned a lot about Connect Invest. For all of the viewers, if somebody is interested in learning more about what Connect Invest does, how can they reach you?
Yeah, thanks for having me. And to reach us, you can just go to connectinvest.com and there'll be a contact us button, or you can start the account registration. And then our phone number's on there as well. I don't have it on the top of my head, but you can call us and we'll make sure that we answer any questions you have. And like I said, thanks for having me on here and sharing some information about Connect Invest. And hopefully you viewers grab some good information as to what we offer, and hopefully you'll use some of those funds to get 7.5 to 9% with our notes.
Connectinvest.com.
Connectinvest.com.
All right. Thank you. Thank you, everybody, for watching this episode of The Preferred Way.
Thanks for joining us for another episode where retirement savers meet alternative investments. Can't wait for the next episode to learn more? Visit our website at preferredtrustcompany.com.